Well, it looks like we're going to eke out a small gain here the last week of February. Actually, the last week, the last trading day was Wednesday. So February was a very good month for the market, followed by January, which was a good month. So we've had 2.5 months or so of a rally in the market, and of course that means it's overextended, even though there has been light volume and the move has not been sharp. It's been a steady gain. It's unusual to be overextended on light volume, and it's also unusual to have a very long rally on light volume. They just don't go together. But that's the market does what a market wants to do. This week we had a lot of economic news. The final quarter GDP revision was in. Remember the final quarter of last year, and they revised it up to 3% growth, was a good sign. It was about 2.8. I'm pretty sure that's what it was beforehand, and they expected 2.8, but it actually came in at 3%. Mostly because of inventory buildup, and because of that inventory buildup in the fourth quarter, what you're going to see in the first quarter is less than 3%. It's probably going to be closer to 2% growth because they work off inventory, so no one's building it. And we saw that possibility in the manufacturing ISM number. It went down to 52.4 from 54, and so that tells you that maybe manufacturing is slowing down for the first quarter. This ISM number was for January. So actually, I take that back. It was for February, and we had durable goods orders also down much bigger than expected, and this is for January. We're down of -4%. It was expected to be down -1.3%. So it's telling me that the GDP for the first quarter, as when it comes out, won't be very robust. So just be aware of that. Um, Pending home sales were up 2%. That's good. Jobless claims are at 351,000. That's very good. If we can stay in that area, and we've been in that area for 3 weeks or so, that tells you that job growth is coming. So it's kind of a mixed bag of statistics. But I do like the unemployment claims dropping to 351,000. That was only a 2 or 3,000 drop, but it still is a drop. The reason why I like that is because that's a leading economic indicator, and the rest are lagging economic indicators. So we like the fact that maybe we are producing some jobs. We're going to get that number next week for February, new jobs. We'll see how that comes in. But you have to be under 350,000 jobs or 375,000, be underneath that for a number of weeks, a number of months to really attack the unemployment claims, unemployment rate. And that's going to take years, I think. Just going to take years. And the last bit of news we got this week was on inflation. There is really no inflation. I know people are going to say, well, look at gasoline prices. There's inflation. Yeah, there's inflation in gasoline prices. But throughout the economy, there's no inflation. Um, and I know people want to find inflation because they want to, argue the fact that the dollar is going to get weak because we're inflating it, we're printing too much money, and that's all true. But it's not. We haven't seen any sign of inflation yet, except in the oil prices. So that's what's going on. Have a great week.